So a quick recap of what's happening with the equity markets so far. Certainly, if we are long equities, it's probably been a pressurizing week thus far. At the start of this week, we had geopolitical concerns weighing upon global equity markets. And into the end of this week, certainly the brown rot affecting equity markets. In addition to that, we have the energy prices declining into the end of this week. WTI prices trading just around the $45 barrel mark. And of course, we have the non-farm payrolls that's going to be due. And so far, the ADP report has actually preempted a possible disappointment over there. But as things stand right now, despite the decline in the week, we pretty much have seen equities market itself in a consolidation phase. And I do think that into the coming week, the focus may remain with the currencies market. So for the full suite of events, refer to the IG calendar on the IG website. But I would just like to highlight a few items that's going to be due. So I do think that the key attention is going to be remaining with the Fed in the coming week. This is Fed FOMC's left the market with pretty much a mixed outlook. But the upcoming week, we are going to get a series of Fed speakers who are going to be reporting, and that includes Federal Reserve Chair Janet Yellen with a semi-annual testimony to the Congress. So in the past, we have heard from her in the sharing about economic outlook. So I do think that for the upcoming report, we are going to be following her opinion with regards to the inflation and outlook of the economy, and in addition to that, perhaps mentions with regards to the reduction in balance sheet. Certainly, we do not have a clue on the timing at this current moment. I do think that the market is paying pretty much a lot of attention, especially given the reaction in the bond market today after the ECB minutes. And indeed, for those trading the dollar, just using the dollar index as a reference, we've seen it actually declining a little bit overnight to trade below $96 level. And indeed, if there's actually further concerns over there, that could actually send it towards the 95.20 support. But otherwise, given these series of Fed speakers where we are going to expect hawkish tone from them, and also the retail sales data, we could very much be seeing the dollar itself actually exhibiting a rebound instead, in my opinion. And in addition to that, moving to this part of the world, I do think that a lot of the attention remains with China, given the consumer producer price index. In addition to that, we have the trade balance data that is due as well. So as things stand, the market is expecting exports in US dollar terms to actually accelerate slightly to 9% year on year. And I do think for the regional markets, we're seeing quite a bit of pressure this week. That is one item to look out for. And last but not least, coming back to our Singapore market, we have seen the prices itself really flirting with the 3,200 support level. But next week, we might be expecting Singapore's GDP that's going to be due anytime between 10 to 14 of July. So indeed, the market is expecting the number to accelerate slightly to 2.8% year on year. And should we actually get a positive number coming through, that's really going to help the market itself to lift from the current range-bound trade levels a little bit.